Look at how the markets in Kenya have performed today. Looking at the NSE 20, finishing off the day almost 0.6% as where we are at 5,024 points. And on the currency front, looking at how the shilling has done today, 86.2 is where we are. But to get a more in-depth look on this, joining us from our studios in Nairobi, we are joined by Daniel Kuyo, who's the research analyst at Kingdom Securities. Daniel, thank you so much for making the time to join us today. First, just want to talk on the global markets, because ahead of the FOMC minutes today, we've seen global markets reacting quite cautiously in the trading sessions. Has this also happened in the Kenyan markets? What was driving market sentiment today?
One of the things that we've seen is a slight influx of foreign investors coming back into the market. And they've been able to push some of the blue chip stocks on an upward trend once again. We have Safaricom beginning to gain upwards as well, some of the banks also, and we'll continue to see this trend going forward, probably because they're beginning to see the Kenyan market as a frontier market, and there are definitely gains to be unlocked as the country continues to develop.
Right. Now, speaking about those frontier markets and countries developing, let's talk about Cooperative Bank of Kenya. Having some pleasing results, 9-month profit up 19%. What was behind this?
Yes. One of the things that really helped Cooperative Bank was they reduced the cost of funds on their deposits. Probably I would attribute this to an increase in the reliability of the agency banking. They've relied quite heavily on agency banking, and this is probably one of the things that will help them improve their profit, their full year profit. And probably one of the key things in the banking sector is innovation, and it'll be a stock to watch as going forward as they continue to come out with new innovative products and also gain ground even with their SACCO. They have a niche market on the SACCO industry, and it will be quite a stock to watch as they continue to work on this niche market.
I want to find out about their South Sudan operations, because they came online about, I think they started operating there last month. We've seen that this happen with quite a lot of other Kenyan banks. How have they performed in that specific region?
Well, they had just opened. They opened in September, if I'm not wrong. And so I think this is quite an early stage to say or forecast what the performance will be. I think one of the key things that I can say is they have a partnership with the government of Southern Sudan, and the government of Southern Sudan has indicated that they are willing to release their holding to the SACCO industry. And this is one of the ways that Cooperative Bank has been able to gain a shareholding, a wide shareholding in the market, is leveraging on the cooperatives, on the cooperative movement. And once the cooperative movement in Southern Sudan is able to grow, we'll be able to see Cooperative Bank have a bigger footprint in that market.
You sound quite bullish on Cooperative Bank. Would that be a stock that you would get into?
As a long-term buy, I would look at Cooperative Bank. I believe that the company has quite strong fundamentals, and I think that it's a bank that has been able to churn out revenues and been on the front of innovation as a company. And I think that as the regional expansion goes on in the East African region, that will definitely be a bank to watch, not excluding other banks as well, but Cooperative Bank, I think that's a bank to watch. I would place a long-term buy on the company.
Let's shift gears and just talk about the energy increase or the tariff increase in that specific sector. I want to find out from you the fact that we could possibly see foreign currency as well as fuel adjustment costs being reduced or coming down in the near term. Would that offset the type of impact that an energy increase would have on consumers and industrials?
I think in the short term, would see a spike in the prices, and it will be interesting to see what fiscal policies that the central bank will be able to churn out to curb inflation. Energy is one of the components of inflation and in the consumer price index, and we'll be able to, the central bank will be keen to keep inflation at its base level between 5 and 7.5%. That's the benchmark rate that they're trying to target. And so it'll be interesting to see what they'll be able to churn out, what physical policies they'll be able to churn out to keep this low. But I expect that going into next year that inflation will probably rise because of this. And so long as the forex rates remain stable, so long as the shilling remains stable to the dollar and other foreign currencies, we could see probably a slight drop, but not so much.
Well, this is positive news for Kenya Power because they finally are able to get some revenue from these energy or tariff increases rather. But if we look at industrials, they will have to bear, the cost of this. How will this impact their competitiveness?
I think one of the things is it will probably make Kenyan goods a bit pricier than they are now. We already we had earlier on tea manufacturers saying that they're facing quite a lot of competition from foreign markets because the Kenyan tea is quite expensive because of input costs and tax on levies. And so I think one of the things that we'll be able to see is the export market, Kenyan export market will probably face a bit of shock because of that because electricity has gone up, then Kenyan goods will be quite pricey in the foreign market. And it will probably lead to less income for the country. Foreign direct investment as well could come down because it will be expensive to produce goods in the country. It will be expensive to invest in the country without having an adequate return at the end.
So some far-reaching consequences that we're looking at. Daniel, thank you so much for that insight. That was Daniel Kuyo, who's a research analyst at Kingdom Securities.